October 24th, 2025. This is my trading journal. Here are my current positions. Each of these puts are not puts, they're cash secured puts. So as the stock trades sideways or up, I make money. If it goes down, I end up getting assigned, and then I'm essentially playing the wheel. I would sell covered calls on those shares. Not much changed. One new position, Fastly. I have a cash secured put on Amazon, specifically their leveraged ETF. I think Amazon will go sideways or up. I think it will probably retrace a little bit before earnings, which is next week. And so that's why I went with a cash secured put. If it does retrace on Monday or Tuesday, I will go in heavy on leaps for Amazon, expecting for their earnings to be good. If their earnings are bad, then I will stop out pretty quickly. But I expect Amazon to go up. Other new position here, Chipotle. Um, I think they're undervalued and they just broke out of a downtrend. And so that's a chart that I'm going to look at in just a minute. For the most part, I didn't do a whole lot today, a little bit of day trading. What's not pictured here, I did have a SPY call and then a SPY put. So I basically broke even on SPY trades today. If you really wanted to make money, you had to buy them yesterday, which I didn't because I didn't really trade yesterday. The reason I think that SPY is up big today is well, it just broke out of a downtrend, quite simply. And we did have a catalyst. We had CPI. It came out bad. But most importantly, Trump tweeted. Trump tends to time his tweets with either resistance breaks or resistance push downward. And so in this case, he timed his tweet with a resistance break. And of course, Trump probably got paid to do that by some of his hedge fund cronies. That's fine. We just look at the chart and we make plays based on that. And clearly, he's been doing this for the last, since he's been in office. So he's very predictable now. It's very nice to trade, in my opinion. So, what does that mean for me? Well, I looked at what was overperforming in the market, what's broken out of trend lines. Bull actually just broke out of another trend line. Amazon broke out of their trend line today. Chipotle broke out of their trend line. Fastly broke out of their trend line. PDD broke out of their trend line, but I ended up selling them for break even because I don't know much about the company, and I need to do more research before I jump in them. And I also bought more SoFi leaps February for $40. Let's look at the charts. Chipotle, undervalued company. Restaurants in general have been beaten down recently, as you might expect. Inflation going up, not as many people going to restaurants, but Chipotle, I think, has gotten more beating than is necessary. Other companies that have been going up, Krispy Kreme has been going up. Even companies like Portillo's Pizza showed up on my scanner. They didn't quite break out of their downtrend, though, so I didn't go into that. And to be honest, I don't really eat there. I do eat at Chipotle on occasion, and they have a clear break. So if you see this on the 1 hour and the 4 hour chart, you can see high volume break. We see right when we hit. Let me go back to the hourly. Right when we hit this support line, this is a support line that was created back here. 1, 2, 3, 4. You see that 1, 2, and this one too, which I didn't really include. So lots of touches on this trend line. So it's a very strong trend line. And what I was looking for, do we have some volume on the support line? Yes, we did. I didn't get in here. That would obviously have been the perfect time to get in. But if I miss this spot, then you can always look for the line break. That's what I am banking on. In this case, it broke out a week ago. When is that? Yeah, Tuesday, October 14th. And now we're completing a retest. Now, usually when you break out of a resistance line in a support, then it turns into the opposite. So here we have a resistance line that is clearly turning into a support. So we see some clear bounces. In this case, it went under a little bit, but on the 4 hour, you can see it's a wick. So it didn't really stick. And then you hit another hit here and another hit here. And you could also argue that my trend line is slightly off. So maybe this wouldn't have been a wick on the 1 hour, on the 4 hour, maybe it would have been just fine, and had stayed above the resistance line the whole time. So we are currently straddling the resistance line. I'm my bet, and I think it's greater than a 50% chance it's going to go up, simply because the volume on the break was higher than the volume on any retrace. So if we look at that, the volume on this in the top of the screen, 325,000 on that first break. Another, yeah, basically a million going up. Now let's go to the 4 hour. This will be easier on the 4 hour. Close to a million going up. Oh, over a million. This is a million right here. This is 700,000. The red candle right here, 500,000. Red candle here, 378,000. This red candle here, 500,000. So we're not seeing as strong a volume on the red candles as we are on the green candles. So that gives me confidence that we're going to see another. Maybe we'll see a wick here. Now, if I'm wrong, where's my stop? I'm just putting it just a little bit below the trend line. Like in this case, what I might do is I'm going to clone this. I'm going to go to where that wick was. I'm going to make it a dotted line. And then if it were to go below this dashed line, then that's where I'll stop out. So far, I'm feeling pretty good. I mean, they got earnings coming up. So what could happen is it just keeps riding this downtrend. Earnings hit. If it's good, and I think it'll be good, that's where we'll bounce upwards. So that's kind of what I'm preparing for. That's what'll kick us off into a proper uptrend. But I'm ready. Now, Amazon, they finally broke out of this downtrend line. And you can see I made a number of predictions in the past. I mean, it hit this upper trend resistance line. I predicted it would go down, and it did. And then I predicted it would go down, retraced right here until we had a catalyst. I thought the catalyst would be earnings, but as it turns out, the Trump tweet or slash CPI being today, even though CPI was bad, sometimes bad news is good news. Those are the catalysts today that helped us break out. I do expect, however, this to retrace until earnings. There's no reason for us to go higher. Government's still shut down. I think that's going to continue. Um, Government's still shut down, and anytime Trump tweets, he tends to tweet the opposite on Sunday or Monday, so I wouldn't bank on it holding. So that's why I don't have any long-term position in Amazon yet. I'm waiting for right before earnings, and then I will play this earnings, unless it skyrockets over the weekend and Monday morning. Then I'll reconsider playing earnings. But I do some cash secured puts. Basically, AMZZ is just a leverage ETF that allows me that allows me to collect some money while it's going sideways, even drifting downwards, or if Amazon is going up. If it does keep going down, then I'll hold the leveraged ETF shares, and then I'll hold them until we see a clear breakout. Bull was looking good today. It's finally starting to curl up against that trend line. I do believe I made the right call buying down here when it was still in the support zone, sort of kind of making trend line support off that initial break. And you can see we finally had a proper breakout. The volume still isn't convincing, but if you look at the 4 hour, there was some clear accumulation here. I really wanted to see more relative volume. But at the very least, we're now close to overperforming relative to QQQ and SPY. This, I think, might bounce down a little bit more if we don't see proper volume to get through a break of this trend line. Let's go to the 30-minute here. If I were to bet on this, we do have some pretty good. Oh, wow. On the 30-minute, yeah, we have a ton of volume here. 100,000 shares, that's not bad. I really want to see more. Like on the hourly, I really want to see a bigger spike. So this could go either way, but I think the downside risk is smaller than the upside risk at this point. So I added a couple more leaps and one or two cash secured puts just to collect some premium while we wait for it to break out. If it does go down this support zone here, I don't imagine us now to go below the support zone, given how strong it's been holding this support zone, like here, here. Like we might see another bounce downward, and then I will probably add even more in anticipation of that to break out. Of course, I would really like it to break out right here, but I think there's actually a good chance, given that we're not seeing a ton of relative volume, that it could go down further just a little bit. Will it go down below the support zone? I really don't think so at this point, based on what I'm seeing in the chart. Other positions I'm holding beyond, I still have a position that if it goes to zero, it's not that big a deal. Oscar, just set cash secured puts on Oscar. I'm not buying any calls because it's been trading sideways. So I just buy cash secured puts when it dips. So anytime it breaks out, it doesn't seem to like stick for very long. And so I'll wait for another breakout and then I'll do another cash secured put at the lower support level. So it's currently in a small downtrend here. So I might consider a cash secured put if it reaches this level right here. In fact, I have an alert. Maybe I'll move it up just a little bit because sometimes it bounces off the top of that. Cash secured put. Other positions I'm holding, BCRX. BCRX, I really like this stock right now. It hasn't let me down yet. Oh, as I speak, it's breaking down below the trend line I have drawn. We'll see how this pans out. Maybe I will be exiting. So I have a stop loss that I can even move up. And my plan for this is as long as it's holding this trend line, I'm still in. And primarily shares. It has broken down quite a few times before. So let me move this down. If we don't bounce pretty soon, I will exit at 7-Eleven. But this, I envisioned as this to be a stock that would go all the way up to this zone right here, simply because of the volume on this red candle didn't seem to jive with the volume going up. So I saw an imbalance there. We did reach the top of this engulfing candle. So I think that plus EMAs, we're seeing a little resistance. So we will see who wins. Yeah, I'm not going to hold this if it goes below 7-11 or so, maybe 7-10. At the very least, I'll sell out my my calls, my long-term calls, since they're still in the green, and I'll keep my shares just for long-term, just in case. Other positions here. SoFi, I did add more to SoFi today. I saw it break out. So this is a clear downtrend breakout. This was a minor breakout where we're seeing relative strength. Actually, this is the first breakout that I saw, and then it went down. Bit of a fake out here is actually still wedging. So that's a learning for me next time I see this sort of behavior. I should buy on the bottom of the wedge, not at the breakout. That's the higher chance of a win. And then what I'm thinking here is we will retrace probably, maybe we'll even retrace back down to this wedge before earnings. And then I'm expecting it to go to the moon. This is the only finance stock I'm holding. If we look at the finance sector in general, XLF, it's clear that the whole scare last week, the credit crisis, was just a way for people to get in cheap on bank stocks. I do think long term there is something to that credit risk, but that's just a guess at this point. For now, it was a scare tactic for the big banks, big players to get in cheap. Now, I'm not playing any banks though, other than SoFi and Bull is kind of in that space. I'm not touching any banks just because of the looming possible credit crisis. Because if that were to end up being true in 6 months, banks are going to be hit the hardest. Next week we have an FOMC meeting. So I'm looking forward to that as another catalyst to potentially break us up higher. We have interest rate cuts that are almost guaranteed, I think. So we're going to see probably bank stocks go up. We're going to see tech stocks go up. That's actually another reason why I think Amazon has a lot of potential, because their earnings are right after the FOMC meeting. And so if they do go down, I don't think it'll go down much. I'll be ready to buy. Why did I day trade Amazon today? Well, what I saw on the 30-minute and the 5-minute was that Apple's rocketing upwards, but Amazon was just kind of sitting there. So you have the market going upwards, and this is early in the day. You have the market going upwards, Apple going upwards. There's another tech stock. Other tech stocks were going upwards, but Amazon was just kind of retesting its resistance area. So once I saw it as the combination of a retest plus, other stocks are starting to run, that just meant that, all right, it's time for Amazon to run as well. I didn't hold it very long. I definitely should have held it long. I think I bought here and then maybe I sold here or something like that. So that's another learning, for me, is that when something does engage into an uptrend, and I think I was looking at the 5-minute at one point, when something finally does go into an uptrend, don't sell until it breaks that trend line. So if I were day trading this right here, I'm on the 5-minute, this would have been the sell signal for my day trade. So next time. And then I think a good point to accumulate is on the 5-minute, wait for the VWAP, or for a retest of the now support trend line. So that's today. Yeah, we'll see how tomorrow goes. I'm mostly in leaps. I'm actually slightly red for the day on my SPY day trades. I should not have got into puts, even though there was some money to be made. I was expecting a retrace down to the gap because the volume was not convincing on this breakout. It was before hours, and usually when the volume is not convincing enough, then we can see the gap close, the overnight gap to close. But it managed to hold up. Each of these EMAs right here managed to hold up. So I think I had a put somewhere in here, and then I sold one here, and then I ended up stopping out somewhere up here when I realized, maybe it is going to break up higher. I expect us to chop the rest of today and Monday, chop or down for today, and then chop for sure on Monday as we get ready for FOMC. So I won't be day trading SPY or QQQ at all. So that's why I'm slightly red today. I mean, not the end of the world. I'm still learning how to best trade SPY and QQQ. I should really stick to individual stocks though and leaps because I definitely prefer the longer time frame. So yeah, I don't think there's anything else to add to that. Fastly, let's look at Fastly real quick. I don't know if I have its chart updated. Yes, so Fastly broke out of a downtrend. Let me go to a higher time frame. We could see a retrace. We do have earnings coming up, and I am ready. If there is a retrace, it could do this kind of thing and bounce off that trend line before it goes up further. But as long as we're in a bull market, which I do believe that we're still in, I think Fastly is going to go up ultimately. I'll put my stop somewhere around here. Worst case scenario, I do see volume. That gives me some confidence. Really high relative volume. That gives me confidence that it's going to keep going up, even if it retraces. However, if the worst case scenario, it could sort of peter along, maybe go sideways until earnings, and then earnings is the catalyst that pushes up. I hope we don't have to wait that long. It just broke out of sort of a steep trend line. Steeper trend lines tend to break faster, more successfully too. So I would hope that maybe earnings pushes us up above this trend line. We'll see what tomorrow brings.